All right, welcome everyone. Just want to do a quick training on the ORB, the ORB, opening range breakout. Okay, as you can see here, the Asia market, Asia session just opened up, 5 o'clock Pacific Standard Time. It's your first candle here. And what we do with the opening range is that we wait the first 15 minutes. Because we trade futures, we usually wait the first 15 minutes. If you're trading stocks, it's like half hour. Crypto, I believe, is also half hour. I'm not exactly sure. I know that for futures, we like to wait for the first 15 minutes. It's a self-preference thing. I know people that do the first 5 minutes. I know some people that do 30 minutes. So we do the 15 minutes. So I'm going to draw out our range. Okay, opening range. Opening range. We're drawing tools here. Shapes. We're square. All right. We're going to go to the 5 o'clock candle. The first 5 minutes. We just count here, the top of the wick here. And then we look for the third candle, the lowest point off the 3 candles. And we'll draw our range, okay? Now, there goes our range here. All right, that is the opening range right there, okay? Now we're looking for the breakout, okay? Let me just write this out real quick so you guys can see it. Okay, opening range. Okay, ORB, okay, dash, opening range, slash, I just add the slash here, so then the breakout. Okay, so here's part of our strategy that we're going to share with you guys, okay? This is default, save, okay. Now, so this is the ORB, opening range, the first 15 minutes, okay? 5, 10, 15. Here's our range. Now we're looking for the breakout. We don't care if the market goes up or down, but before that, I'm going to explain to you what the opening range does. For every session, when the session opens up, the institutional traders, the big traders, the banks, the annuity funds, the pension plan, anyone that's in the stock market or in the markets, they're repositioning themselves, okay? They are repositioning their positions in the market. Now, that's what they do in the first 15 minutes, half hour. They reposition themselves. Now, once you let that set, we want to see where our bias is, so what we believe the market's going to go. If we're looking at this, we want to go back to the 1 hour candles, right? All right, the 1 hour candles give a better idea of what the market has been doing. As you can see, the market has been selling off, and then at the closure of the New York session, the bulls stepped in and they pushed the market all the way back up. All right, at this point, we have to look. You got to make it more educated. If I was to guess, right, the market is going to sell off and kind of reestablish and revisit this area here and try to take this area out. Okay, there's been a lot of selling pressure going on. All right, a lot of selling pressure going on, and the bull stepped in and took the market back higher. Now, what the market always looks to do is they look for balance. It's called equilibrium. The equilibrium is basically where the buyers and sellers they believe it's a fair market, okay, and that's called equilibrium. They're looking for fair value, okay. Now, as you can see here, the way we make our money is we look out when it's considered an imbalance. Okay, when the bears are in control, like this area shows that the bears are in control, is they're taking the market lower. These numbers on the side is basically every number is for each contract. So right now, contracts are being sold at $30,039 each contract. That's what the institutional traders are trading. One contract is $30,000. We sell a portion of a portion, okay, or a percentage of each contract, which allows retail traders like myself and newer traders like us, beginners, right, to be able to participate in this market. All right. Now, everyone that's participating, obviously they're called participants, right? They participate in the market. Okay. The more participants, the higher the market can go. The market is designed to go higher. It's just designed to go higher. Okay. Now that we're go back to the 5 minutes. So our bias is that the bulls are going to be in charge. Okay. Excuse me, the bears are going to be in charge. Let's go back to the 5 minute. Okay. In the 5 minute, let me make this a little bit bigger so you can see it. Okay. We're looking for the breakout. So when we say breakout, we want this to close outside of this range, outside this box, to close. We have 5 seconds left. So now that the market's closed, okay, we want to see it revisit this area. Now it's going to revisit this area, okay, and you can put an order here to go lower, Okay, let's see what happens, right? So it would look something like this. If I was to draw this out, what you wanted to do is you wanted to break out of the range here. Okay, come down here, revisit this area, right? Once you revisit this area, we want to take a short position and join the party and ride the momentum down. That is our A plus setup. Okay. If it was the other way, it'll be up here. Want to break out here? You want to break out the top of the range from here, here. You want to retest the range. Then we would enter somewhere around here. We enter somewhere here and go long. Okay. That's basically what we want to do. All right.